All right, guys, we got some good news. We have some bad news, but most importantly, we have some really interesting updates that you need to know about this market because things are cooking right now and maybe not in the way that you want them to. But I do have a little glimmer of hope as well. Jumping over to Tyler Hill's tweet here, we can see we're currently preparing for a week of pure chaos. It's time to lock in, as he points out, that we have been in this bear flag here and we have broken below it, maybe even retesting it here and coming down as Bitcoin right now sits at 87,500. It isn't actually that bad from when I went to sleep, but I know some people have been awake during a push down to 85,000. Now, there is a silver lining in this move to the downside, but we'll get there in just a second. Now, if we do look at what Tom Lee said, he said that major crypto market makers got wiped out on the 10th of October. Now, what does this mean? Well, this is something that we've been considering and talking about over time, right? On the 10th of October, we had that massive deleveraging event. This deleveraging event wiped out someone, something, a whale, an institution, whatever, right? And that's probably one of the reasons why things have been so bleak and actually quite slow. We haven't had major crashes or major pumps or really major moves at all since October 10th. I know things have gone down a lot, right? But this has been a long and slow bleed. I know this isn't what you guys want to hear, but this could be one of the major reasons why we haven't had that move to the upside as market makers try and reignite. They try and generate cash flow. They try and generate capital once again. Now, if we look at Bitcoin's price, right, we have this low sitting at about 84 or 85.3, depending on where you count the candle body closes. And we are bouncing from slightly higher than that region, potentially keeping this higher, low formation intact. But that could also be the bear flag continuing that someone like Tyler Hill is talking about. So keep that in mind. Remember, I believe that if we do lose approximately 85,000, that puts us right in this zone here. We want to, of course, hold 83,000, but if we don't, we can come down 75,000. Things can get a lot worse from there, guys, but this is the time, right? Again, this is the moment where you need to realize either you're in it for a situation like this right here with the hope and the potential that we're actually in a situation like this, but of course we can't forget that it might be like this. If you're in it for this to DCA in this, or you should be out, you should be waiting patiently, and you should be looking for what you would consider close to, if not the bear market bottoms. Now, that's not how I move in this market, right? I don't believe that I can time that. The best trades I've ever done are simply buying in moments of fear, uncertainty, and doubt, and continuing to do that longer than the majority of people in this market. The majority of people being over 90% that lose money. I just do the opposite of what they do. Now, this doesn't work out instantly. This isn't a quick overnight success rate. This is okay, for example, I'm going to buy at about $40,000 for Bitcoin because I think the bottom's in. And then I turn out to be wrong for 644 days. However, during that 644 days, I continued my job. I continued generating income and enough that I could DCA into Bitcoin. I could DCA into Solana. I could DCA into XRP. And I could make a significant amount of money even where we sit right now. Now, this isn't to gloat. This isn't to brag. This is to tell you right here, we may be at the equivalent of 40,000. You have to decide, am I going to be the person that DCAs into the assets that I believe in, not necessarily Bitcoin, Ethereum, XRP, Solana, the assets that I believe in, or am I going to be the person who can time the bottom? Again, I believe I cannot time the bottom, and all of my best trades have included buying at the wrong time and DCAing into them. Buying at the wrong time, right here, and DCAing into them. That's been my historical output, and I'm going to continue to do that. So with that said, the news is very important right now, but we have to be prepared, right? We have to be prepared for the move. Now, with that said, guys, we also have, like I said, this this prediction and this option. All right, Bitcoin down to 40,000 is actually where the bear market low, if we get the same or similar move we got last time, 77%. Let's just say it's 70% this time because there's more institutions. That's 37,000. If it's 66%, it goes down by 10%. That takes us to 42,000. Now, this isn't to tell you that this will happen. I just want you guys to be aware of what is possible in this market. Now, according to bull's theory, the Fed is preparing to sell US dollars and buy Japanese yen for the first time this century. The New York Fed has already done rate checks, which is the exact step taken before real currency intervention. That means the US is preparing to sell dollars and buy yen. This is rare, and historically, when this happens, the global markets surge. Japan is under heavy pressure. The yen has been weak for years. Japanese bond yields are at multi-decade highs, and the Bank of Japan is still hawkish. Together, this creates a sense or a stress that's not just for Japan, but for the global markets. This is why central banks are now taking the situation seriously. Japan has already tried to defend its currency many times on its own, but it failed in 2022 and 2024, and even July 24 intervention only worked for a short time. History is very clear on this. When Japan acts alone, it does not work. When the US and Japan act together, it does. We saw this in 1998 during the Asian financial crisis. Japan's solo interventions failed, but the US joined. The yen stabilized. We saw even more clearly in 1985, the Plaza Accord, when a coordinated action pushed the dollar down nearly 50% over 2 years. That changed everything. The dollar weakened, gold, commodities, non-US markets all pumped. If the Fed intervenes, this is how it will play out. The Fed creates dollar, sells them, uses those dollars to buy yen. That weakens the dollar and increases global liquidity. And whenever the dollar is intentionally weakened, asset prices usually surge. Now, guys, look at what's happened. The US dollar as a share of the reserve currency has fallen to the lowest levels in a century. Meanwhile, gold is reaching new highs. Gold, however, is now overbought than it has ever been in the last 50 years. This level of buyer exhaustion always forces capital to move somewhere else because it is not sustainable. Let me know what you think about that in the comment section. But if we look at crypto, Bitcoin is one of the strongest inverse relationships with the dollar and one of the strongest positive relationships with the yen. Right now, Bitcoin and yen correlation is near record highs. But there's a catch. There is still hundreds of billions of dollars tied into the yen carry trade. People borrow cheap yen and invest into stocks and crypto. When the yen strengthens, suddenly they are forced to sell these assets to repay the loans. We saw this in August 2024. A small BOJ rate hike sent the yen higher. Bitcoin crashed from 64 to 49 in six days. Crypto lost 600 billion in value. So the yen strengthens carries short-term risks for crypto, but the dollar weakening creates long-term upside. Now, why is this bullish for crypto? Because Bitcoin is still well below the 2025 peak. It's one of the few major assets that has not fully repriced the currency debasement. If coordinated intervention actually happens and the dollar weakens, capital will look for assets that are cheap and relative to the macro shift. Historically, crypto can benefit strongly from this environment, and it might be a huge setup for 2026. Now, I wouldn't say this is guaranteed, but what we are seeing is these huge rallies, gold, silver, and assets. The S&P 500, very close to all-time highs. The NASDAQ, very close to all-time highs. Gold, all-time highs. Silver, all-time highs, having broken 100 and now at 107. Quite a historic and insane move. But can this continue to rally? I don't know. Maybe it can. But what we're seeing is potentially not as much buying as you think, and more so currency devaluation. In fact, specifically the dollar devaluing. So I believe that money eventually is going to rotate into Bitcoin and crypto from here. Maybe not in the way that we're used to, but as the price is down, I think that the second, or if the prices start to rally, that's when money will start to move into Bitcoin. Now, I could be wrong in this thesis. It might not happen, or it might take longer than what anyone wants to happen. However, I'm willing to outweigh or outweight, as I said earlier, the majority. I believe this is one of the best assets, but it's not the only asset I hold. I also hold the S&P 500, the NASDAQ, all world indexes, and real estate. All could benefit from what's happening in this environment. That's why I think it's important to stay diverse, but my outsized risk, my outsized bet, and the one that I'm still going to stick by is Bitcoin. And with that said, I'll see you in the next one. Peace.